Here for a Power Lunch exclusive on that note. Ernie Garcia is CEO and co-founder of Carvana. He joins us from the William Blair Growth Stock Conference in Chicago. Ernie, it's great to have you here. Welcome.
Hey, thanks for having us.
What are you doing, to borrow Oz's phrase, to avoid losing money, especially as the company returns to growth? And that certainly has investors excited this year.
Yeah, we appreciate the endorsement. So Oz does knows. We very much appreciate that. I think the company's been on a great trajectory. The team's done an incredible. I think, we went through some tough times a couple years ago. We've been on a great run since. We put together an incredible plan. We've got an offering customers love. We're in a huge market. We did well enough last quarter with the most profitable automotive retailer as measured by EBITDA margin last quarter. So we're on a great run. We just got to keep it going. Things are good.
Did the meme stock traders help keep your company alive, or was that just a coincidence?
I'm not sure that we were ever really too memey, but it's hard to know who the actual investors are. I suppose you guys are better positioned to guess that than we are, but definitely not on the keeping alive point. I think the company was always much stronger than the stories that were sometimes told. I think what matters in a business is you got to have something that customers love. You've got to execute really well. You've got to build a business model that can make money. We've done all those things. We've executed great. So we've been on a much better path than many perceived, and I think that's becoming clearer now.
So what do you think accounts for the fact that used cars, which were hard to get a couple of years ago, are now suddenly, is demand up? Are units more available? Why is it that transactions are now supporting a much healthier position for the company?
I think the used car market is reasonably stable. It's about flat to last year. It's still down versus where it was pre-pandemic in terms of total volume. Car prices are down quite a bit, but they're still much higher than they were pre-pandemic. So I don't think this is really a macro story. I think consumers love buying cars online. They love having a broad selection. They love saving money. And we're very well positioned to deliver those things, but we've got to execute. We had to build a big business with a bunch of fixed expense and a bunch of fixed investment. And I think when the world turned on us and car price went way up in late 21, that was a tough transition for us. We were expecting a different world than we found ourselves in, but we've adjusted incredibly well. And I think that the story is really about what consumers want, and the team doing a great job executing on that.
You've mentioned 3 times, and just in that last sentence, the word execute. We had to execute. We had to execute. What was it in the turnaround that was most important for you to execute, and how did you do it, and what do you have left to execute?
I think the air of entrepreneurs, I think, is to be ambitious and aggressive. I think it's an air that serves you well in general, and it's an air that you will likely always make to some degree. But I think the other side of that coin is making sure that you're focused and that you execute really well. And I think that over the last couple of years, we found a gear of execution that we never had before. And I think it's been incredible. You got to do all the little things right. There are thousands of little things. There's tens of thousands of decisions you have to make right every single day. You have to have people that care all throughout the chain that are making sure they deliver great experiences to customers. And I think our execution has been very strong. I think that we've always been very well positioned. It's always made a ton of sense. Our vertical integration has always been a big economic advantage, but we've executed very well over the last couple of years. And I think that we've learned how to do it, and our goal is to continue.